Hello, everyone. We're back again with another weekly. I'm pretty sure people are not feeling too good with the crypto market, and I'm going to talk about some of that. I'll do the best I can, but there's a lot of garbage happening in cryptocurrency. So bear with me if it takes longer than it feels like it should, because there's a lot of ground to cover. And I don't want to spend too much time on some of the stuff that's outside of our control. So just so you know, I have targeted things that I will be talking about, and I'm going to go through them kind of in order with an emphasis on this DogeZilla business because it's so jacked up. I felt it was worth the conversation, frankly. So without further ado, let me just repeat where we're at with the show and what I do with the so-called, as I call it, Lunk Challenge. Of course, criteria for the Lunk Challenge is up on your screen, and it ties every week. I do the calculation for the metrics. Based on the metrics that I see, then I determine, okay, time to do another burn of Luna Classic. And this is me doing it. Others are not going to do it, and that is okay. I'm cool with being the only one participating in it. It's fine. And Luna Classic, I am going to be talking about a little bit briefly later on and a high level what's happening. But just so you know how it works, simply being here contributes a burn. It means that I will take and I'll burn. You can follow profile at Twitter. It's at the bottom there to see the actual address for what we do for the burn. And you can see past burns as they happened, as well as new burns as they happen after the fact. I've already transferred new over to that business. And so I think we're in a good spot. And just to kind of give a sense of where we are with the burn that's going to happen here, looks like we're hovering somewhere around probably about $13-ish, which isn't bad. I'm okay with it. About $13 for last week's stats and the burn to be for this period. So $13 will be burned. You'll see that in the wallet after we wrap up today's episode. So let's go ahead and quickly display what's happening in the market. At least for me, I care about Ethereum more than anything else. And I use Ethereum as kind of the marker for what's happening in the business. I don't use Bitcoin because it feels like Bitcoin is losing some of its grip. It still has grip, but losing some of it with respect to price movement, price action, predictions. It feels like Ethereum is giving us more of a sense of where things are and where things are going. Now, there's a couple of things I noticed when I was watching the movements for both Bitcoin and Ethereum over the long term. So I said in the last that it feels like Bitcoin is on its way down. It feels like Bitcoin is going to head in a downward direction from where it currently is, which is about 16.5. And this might freak people out, but it's based on a number of different things going on right now. Sentiment is harmed. The FTX fiasco, which I am going to talk about ever so briefly. A lot of things are all playing into factor with this business. And it just simply highlights how fragile crypto has been. It's almost very similar to like the Lehman Brothers, Bear Stearns, Madoff. Everything was a house of cards. Everything came crashing down. We're seeing the crypto equivalent of all of that. And I'm going to talk about that here later. But if you notice, Bitcoin about 16.5. And for my eyes, it's trending in a downward direction. I'm going to spitball this and say that in the month of, let's say before the month end-ish, probably somewhere around 14, 15 grand. December going a little bit lower. It basically keeps pushing down bottom resistance. I do think that in Q1, we'll breach the bottom resistance, or at least prior to Q1, probably just in like January maybe. We'll breach the bottom resistance, head downwards, and we might go as low, and I don't want you to freak out. I'm just calling like I see it here. I think we might go as low as possibly about, possibly about 11, 12,000 in the next couple quarters. And again, that just like, I'm just calling like I see it because it seems like lots going on with Bitcoin. That's not Bitcoin's fault. There's a lot of outside things influencing Bitcoin that are contributing to the statement I just made for you, and I don't want you to freak over it. I'm just calling like I see it, right? I do think there'll be a rebound, but here's something I noticed. When I was watching just general price movement, before it felt like Bitcoin was going to go on a very strong run, possibly at the end of 2023, leading into 2024. Does not look like it's going to be a strong run back up, rather just a recoup of what we've lost. In other words, where we are now is certainly down from where we were like a couple of months ago. It feels like next year is going to take longer for us to get back to even where we were, as in it's the true definition of a bear winter. If you've heard me on the podcast at cryptotalkradio.net, you'll have heard me say it feels like we're en route to a bear winter. This is evidence, at least from my eyes, that the bear winter is our next destination. So anybody who's been invested in Bitcoin, you fit in one of two categories. You either believe in it and you're stacking bills, or you're sitting on it, right? Or you're skeptical and you're getting out of this business. I don't fault either side of you because there's a lot of uncertainty. Things can change. You could have actions and tasks and things that come up that cause a bullish sentiment. I just don't think that we're going to see 2021 repeat anytime in the near future. It's from my eyes. However, when I looked at Ethereum a little bit deeper, Ethereum is now trending downward. It's just like Bitcoin, down into the 1227 mark. But when I had looked a little bit deeper into Ethereum's overall, Ethereum is also projected to go significantly down. And I said, if Ethereum goes beneath $900, I'll do live karaoke on this YouTube channel for people. That's I'm honest on it. And it looks like it's going to hit that sometime in December. So I've already got the song chosen. I'm ready to go, and it is what it is. But I noticed that Ethereum's price movement seemed to indicate that it was going to rebound much stronger than Bitcoin is going to do in the same time frame. This is weird to me. It's not unexpected. It's just weird because, again, so far, Bitcoin has largely been kind of governing price movement. So if you do see that Bitcoin trends down, and then at some point Ethereum's going down, but Ethereum goes up while Bitcoin continues to go down, well, what does that tell us? It might tell us that Ethereum's taken over in terms of price movement. And that's a huge win for cryptocurrency because it will hopefully let us decouple from Bitcoin's price movement and allow cryptos to really thrive without the dependency on Bitcoin. Bitcoin, by and large, gets price shifted, arbitrage, you name it, shorts, longs, way more than most any other crypto that's out there. So it has significant levels of price disruption that we don't see in other cryptocurrencies. As a result, everything else kind of price moves with it. We just saw recently where Bitcoin did have somewhat of a run. Everything else pumped up green, but that didn't last. It didn't sustain. And that's because ultimately Bitcoin started trending right back down. And that was tied to the demise of FTX. Now, if you are not aware of the FTX fiasco, I'll high level talk about what's going on with this business. I'm not going to spend a lot of time with it, but I'll high level talk about what's going on with this business. So first of all, if you don't know what FTX is, I celebrate you for staying away from the garbage, but FTX was a competitor, it still exists, competitor for Binance as far as an exchange, to the point that they even created FTX.US, separate from FTX, the actual exchange for US companies, just like Binance did Binance.US, separate from Binance.com. The main FTX is what's insolvent. Basically, it's on bankruptcy, and he tried to get bought out by Binance. Binance initially said, okay, but then backed off the deal because Binance looked at the books, said, this ain't going to work. Turns out FTX was just run by a bunch of kids that say the word Jeet and a bunch of crypto bros and a couple of girls, apparently, all living it up in this major mansion, $30-something million mansion out in the Bahamas. Well, that should concern you. That not that they work from home, but that is basically a bunch of college kids or young adults, I should say, running the whole business, this whole major organization out of this building out in the Bahamas. But worse, that so many of these high-level players, like we're talking the BlackRocks of the world, were putting money in this garbage. So many people, so many high-level players were putting money into something that really was not sustainable because there was really no strong backing behind it other than the fact that it was competing with Binance. From my eyes, at least, I didn't see any fundamentals. Elon Musk came out and he said, I had talked to this Bankman-Fried dude and red flags were going off in my mind and I didn't trust it. And so, okay. But to hear that BlackRock was involved with this business is shocking to me. It's shocking that so many rich players bought into this. When you look at the guy, right? His hair, his look, he dresses like a bum. He doesn't exude confidence. He talks like a bro. Like it's shocking to me, but at the same time, it's not. It's not because we see across the business that these crypto bros and all this seem to engender trust that doesn't seem warranted to me, but they seem to engender trust. And as a result, we keep seeing all these failures. Well, the failure of FTX, people did analysis and it turns out that they found connections between FTX and many of the other ones that failed. I want to tell that story right now because I've said on a repeated basis, specifically to my tribe members, but also on various videos in the podcast, we don't have decentralization. Certain people on YouTube will emphatically disagree with me, and that's fine. We don't have decentralization. Decentralization, the illusion that you can create your own wealth, you can basically be your own bank. Your assets are all yours, they're totally protected, you have total security. No, because in order to generate true wealth or to cash out of whatever you have, you are forced to go through a centralized exchange. So a centralized exchange has total control, as in custodian, of the assets that you deposit to them. When you have some of these other ones over here that do whatever they're doing, they have all carte blanche authorization to block you from your assets at their whim. We've seen it happen time and again, and it never stops, right? So the Voyager of the world, the Celsius of the world, the Circles of the world, etc., and so on and so forth, what happens? You get into this groove where all they do is say, you know what, I am going to shut down Coinbase, right? He came out and said, you know, if we lose money, we're going to shut down. They can just do that. That means we don't really have decentralization because you can't get to fiat without relying on something or somebody. Well, the same is true for these organizations like the Voyagers, etc. of the world, because they connect to somebody else. So FTX had BlackRock in the back pocket. BlackRock, of course, is one of the most wealthy organizations out there. Hedge funds in there. FTX could not function without relying on the big money players. The big money players are tied in with the fiat banking system, which means that these crypto organizations couldn't sustain without tying to big banks anyway. How is it true that we have decentralization when you have these organizations spin up that still have to deal with big bank, right? If you have to deal with big bank, you don't have decentralization. All you're doing is making it easy for them to pull out, yank the money, and disappear in the void. And that's what we're seeing repeatedly with multiple of them shutting down. Well, FTX had connections into Voyager because of the crash and burn of Voyager, and FTX at that point being involved in terms of acquiring some of the, in this case, bad assets of this one. You had Terra Luna. Terra Luna was part to blame for the crash of Voyager. All three of these were connected. Then you tie it to big banks and big hedge funds and big players like the BlackRock. All I'm saying, we don't have decentralization because these large organizations that drive the business forward are dependent on big banks. Not only that, but they invest in other ones. You know what that's called? It's called a pyramid scheme or a house of cards, depending on how you describe it. They all were interconnected, which means any one of them failing was going to crash all the rest of them. This is the domino effect you now are seeing. You're seeing that when one fails, it just so happens they were connected to this one, who was connected to that one, who was connected to that one, who on the back end was connected to banks. At one point, FTX, this idiot, Bankman-Fried, was described as basically being the JP Morgan of cryptocurrency. The truth is, none of what he was doing and the company was doing would ever have survived without big banks in the first place. So all I'm saying is you still have loans, you still have dirty money, you still have unclean assets, you still have interconnection. You do not have decentralization. If you keep your assets in your own wallet by itself and you never cash out to any of these exchanges, you never transfer to any of these orgs, you're probably okay. Here's the downside though, you won't be able to get out to fiat without relying on any of them. As long as that's the case, we don't have true decentralization, and you can't do, because governments don't want you to get to fiat easily. They want to make it hard to get to fiat until such a time as they can create their digital currencies, which of course duly notes how much money you have and restricts how much you can pull out, as we saw with Santander in the UK. All I'm saying, and I don't care who disagrees, we don't have true decentralization. We don't, and we never will. Not as long as we keep tying cryptocurrency to fiat, because the connection to fiat makes it where you cannot do decentralization. Even if you look at validators, right, for cryptocurrencies. I was looking at, and I even talked about how Happy Caddy Crypto, he has a validator, it's active. Classy Crypto apparently was talking about doing one, and all these validators. To be a validator, you have to either set up local physical hardware or you have to set up a cloud instance. That means you're relying on somebody else. If you do your local instance, you're relying on the electric company not coming down on you for burning electricity. You're relying on the cloud. If it's AWS or it's Google Cloud, whatever, you're relying on them to make sure they don't shut you down. And Google already came out and said there's not going to be any mining, at least, well, validation. Essentially, they could say, okay, we're not going to do any validations. There was a risk on the Solana side, same thing. You're depending on somebody else anyway. It's not descend. You always have to depend on somebody else. There's something else, someone else in the mix in order to make the thing work. That's the flaw of it. However, it also might be the upside because there was a case very recently. SEC lobbied a case against this LBRY. If you don't know LBRY, it has to do with file sharing. And if you know about like BitTorrent and the other ones, very similar type of thing it was trying to spin up. And the tokens, the judge, basically SEC took them to court, took the bastards to court, and the judge said, yep, these are securities and you violate securities law, do. And people were shocked. It's like, wait a minute, what are you talking about? This isn't a security. What are you talking about? And this comes from a lack of understanding about how the SEC defines securities. And I want to try to break it down best I can for people so they hopefully understand how it works because it ties to all cryptocurrency. This idiot that's behind LBRY came out and said, you know, this business here, I'll even highlight it for you. This business here, it's going to affect everybody. No, because it goes to the core definition of what a true security is. Let me help you in what this means. It's not true that every cryptocurrency is a security. Bitcoin has frequently not been called a security. It has been frequently described as a commodity. The security talks about the Howey test. I encourage you to go look in the Howey test. It's a pretty straightforward list of items. However, it's never been directly correlated to cryptocurrency. Gary Gensler is trying to cheat the process and circumvent it and try to force the Howey test on the cryptocurrency so that they are regulated as securities. So of course they are forced to duly note what they're doing. The key between why this one got nailed, the key between why it got nailed and why others don't get nailed, and then I'll talk about what I did because I knew this was going to happen to people, is right here. Where they get interested is when money is involved, when fiat is involved, because securities, something is securing it. If there's something securing it and there's an expectation of profit as a result of getting it, it's essentially going to be treated as a security in terms of what they think, whether good, bad, right, or wrong. I'm saying that's the thought. The problem is the exchange of fiat in equivalence to whatever cryptocurrency. So although this has to do with file sharing, and although this has to do with distribution of tokens, it's not simply that they distributed tokens. It is you're selling them. You're selling them and you're backing it against something, and there's an expectation of profit. Well, I know what you're saying. You're saying, well, why would I do it if I wasn't going to get any money out of it? That's a good question. That's something you need to really think about. Because if you're thinking about something for the purposes of making money, then yes, depending on how that money's made, it might well be considered a security in your country, and you wouldn't necessarily know it until something's locked down. The reason Bitcoin has largely been absolved of this is that there's nothing behind Bitcoin. There's liquidity, certainly, but I'm talking other than that. There's nothing behind Bitcoin itself. Your Bitcoin, by you holding it, there's an expectation of profit not due to any action somebody's taking either. There's nothing somebody's doing that's building something on Bitcoin itself that should be generating profit. It's just basically fair market trade, essentially. Somebody's willing to pay X to get Y. That's really what Bitcoin is. When you start talking about smart contracts and codes and tokens that are all around it, now it's somebody has to do something to create value. Something that they're doing is increasing that value. As a result, the Howey test is going to kick in. When the Howey test kicks in, they're going to consider it a security. So if that's a simple delineation for you to kind of think it through in your mind, that's why Bitcoin has largely been left alone. Because Bitcoin doesn't do anything by itself. It's just basically a value state, and nothing's being built on top of it. You could build something around it, as in we'll accept Bitcoin for business, but it's not due to them doing that to cause a price movement. It doesn't really do anything. Smart contract ones all must do something. Where am I going with this? I believe long haul, and I hope long haul, we're going to get to a world where ultimately we're going to see that the Ethereums of the world, Polygons of the world, Phantoms of the world are going to have a harder time keeping up with what's going on around cryptocurrency because all of them depend on the actions of somebody else to create value, which puts them in the spotlight of being a security, in my opinion. So let's talk about Luna Classic. Luna Classic is trending sharply down, and people started getting worried. There are a couple of things, and I'm going to spend just a brief bit of time on this. A couple of things that you want to think about with Luna Classic. Number one, I said that the terror rebels, when they invited the telescams of the world, was going to harm sentiment. That's part of it. Part of it also is that I said there's a burn mechanic and they're working to try to do it, and they have a plan to do it. There's a roadmap on their site. If you want to check it out, I do recommend you do. So they have a plan, but it's all hopium because they can't tell you that it's going to work. They suspect it should work. They can't promise that it will. They can't guarantee it will. So it may not work. It may not turn into anything. They're hopeful that it will. They're optimistic that it will, but at the end of the day, time has to pass. Luna Classic, if you're going to invest in it, is a long haul. It's not going to be happening short term. Certain people ran numbers. They estimated in decades before it ever gets to $1. It is what it is because it still has over 6 trillion in supply. The burn has to be more substantial. On a side note, hopefully this teaches people about SHIB and why I said that all these tweets from the SHIB about, hey, we burned billions or whatever, it's hopium. You're hopium because at least with Luna Classic, it at least has a blockchain to work with. It at least has the community sentiment right now. It at least has something to show for it. It's just harmed right now. And they got to repeg to the stable coin. Unfortunately, because of how poorly the thing is built, they got to repeg to stable. They haven't done that yet. So until they do that, you're not going to see significant run up. You will see some run up, but if you notice the graph here, it's on the downward trend. Downward trend, possibly down to its very bottom price. You've got a choice to make if you're in Luna Classic. You can keep sitting on it and wait, or you can dump it. I would recommend not dumping it because if you do, you're just selling at a loss. You don't lose anything unless and until you sell. I don't think Luna Classic will fail. I do think it'll go back up. Nobody knows when. Same with Bitcoin, same with Ethereum. It's in the same situation. I don't think Luna Classic is a risk. It's just that it's trending down because of all the different things that are happening. And Luna Classic is somewhat correlated with Bitcoin price movement. That means that if I'm right and Bitcoin is indeed going to go back down into like the 12,000, 11,000-ish range, that means Luna Classic's in for a world of hurt, and there's pros and cons to that. The lower the price, the greater the burn, right? But you need sentiment. You need people wanting to buy your product. You need people wanting to buy in. And right now, there were some people that wanted to buy in at a point, and those people seem to have disappeared. Doesn't mean they're all gone, but certainly you don't have anywhere near the velocity that you once had way back over yonder when people were confident when it was at its all-time low. So if we get down to the all-time base, it might do another run-up. Nobody really knows. If it does another run-up, that's a significant run because that's going to be, I believe, 5x when it hit its base all the way up, if I'm not mistaken. Might even be higher than that. So if you put some money in there, you could stand to make a lot of money on another run-up. But do we expect that it's going to go up to like a penny, 10 cents? No. Not in the short term anyway. Not unless significant changes happen, and we're not en route to do that, at least not at this point. If anybody's listening to this, whether live or after the fact, that is or was in the LIBERO/LIBERA ecosystem, this next update's for you, and I hesitated covering it, but I think it's kind of, obviously the devs suck at explaining, and there was a lot of people pissed off, and I want to talk about it. So, I said ages ago that LIBERO Bank, the miner, all of it feels like it's running out of money because I looked at the numbers and it looked like to me that it's running out of money in places likely because of the printing, the excessive printing and the value being significantly high, right? We have 27 billion locked for less than $1 million. That's not good. That's not good. I want to say this had 100 billion in total supply. So if they've given out roughly half that number, as in just giving out to the rewards, they gave half to people. There's 27 billion locked in there, and they've cashed out roughly 3 million in value. That to me feels like it's not solvent. You've got 27 billion in circulation, so there's less than $1 million in circulation. So there's less in circulation than the amount that you've given away. Like, that's how I read it. To me, that's how I read this. The vast majority of these people are locked in there for 4 years. So if they're not like me, where I just cashed it out, I was like, whatever, it'll help what little it can, and some people might have said, nope, I'm not going to do it. I'll hold, and I celebrate them because, when they dropped this down to 500, I didn't feel like it was worth my time or money. Well, there were some messages and they called out that this, which is the airdrops, dropped. It actually went down. It used to be $100,000 and it went down to $50,000. Well, a while ago on one of the weeklies, I called out that where they're getting this from used to be the value in the treasury, right? So when you go to, I believe it's dashboard, and they may have removed it. Nope, here it is. So you have marketing, development, treasury. You only have $1 million in the treasury, okay? So if you have $1 million left in the treasury, and then you have the LIBERO insurance treasury, which they initially were going to start tapping for this payout. Then they changed the payout. Now it's 50,000 as opposed to 100,000. But people also called out that, okay, are you going to fix LIBERO? No. Then they spun up the miner. So then the miner comes into play. And clearly they took at least some initial money to put in the miner. I ran the numbers again and I was concerned because if you look, here's how much was deposited. So that's how much was put in by people. We're talking by individuals, by people. That's how much was put in the thing. Well, if that's how much was put in, 1.6 million, what's left over is 1 million. And you had close to $600,000 claimed over almost 5,000 users. That's not good because it means that people are not wailing in like they expected them to. They're not tossing all in there. Here's the other problem. This is giving you a liquidity. I talked about this before. It's giving you a liquidity pair. It's not giving you Binance USD. It says it is. It's not. It's giving you a liquidity pair. So when you cash out of whatever it is that you have, you're getting a liquidity pair. That means you're getting 50% LIBERA, 50% Binance USD. LIBERA is actually crapping. Since LIBERA is crapping, it means you're not getting the full value of what they tell you you're going to be getting. So they might tell you that you're going to get, $30, let's say. And the truth is you're not getting $30. You're getting whatever the equivalent value would have been at that time, but you're not really getting $30. It's not true. So if I go to Liberator Bank and then Libera Bank, these dropped significantly, especially the Binance USD rewards. I said before, the banks are basically giving you nothing. You're not really getting much real true value out of what they got here. But I also noticed if you go back to Libera's price, it's $1.07, and then the pair is actually lower than the price of the token by itself. Why? Because Libera is crapping. Libera is crapping because LIBERO is crapping. LIBERO is en route to adding another zero back. It is so far beneath its entry price when it pre-sale, it might as well be funny money at this point. They tried to bump up the sales tax, not understanding that it's not a sell issue. That's not the problem. The problem is they haven't fixed the core token. So if you go in to the miner, at least Libera miner, understand you're getting a liquidity pair where 50% of it is drastically losing value, which means that the values that they give you on Libera miner are going down. It's insolvent. Rather than solve it, they decide to launch this BNB Garden. The BNB Garden is another shiny. As I told them, that's their pattern. They just spin up shinies. And it's another shiny. And they pitched it by saying, you know what? You can actually withdraw on this one. This should be an insult to anybody who's in LIBERO, anybody who's in the Thorium miner, anybody who's in any of the banks, anybody on the FLIBERO, which I even talked about. This should be an insult. This one, instead of fixing the other one to allow people to unstake because they knew it would crap, they spun up a new shiny and then said, yeah, you can go and unstake anytime, but and then they just charge you a fee. What they should have done, if you think about it, is allow anybody to unstake from any of the other stuff, but then simply charge them that same fee. Because what's that going to do? You could do that to trigger burns. You could do that to reward holders. You could have all sorts of possibilities if they had simply changed the existing miners. And even still, I would say Libera miner is a failure. Trash it, go on, move to something else because it ain't working. But they decided to go ahead and do this one. And it does have people buying in. You got 500 BNB on there. So it does have people buying in there, 200 some odd people who they just buy into every shiny. No problem. I have no issue if they truly looked at it and said, sure, why not? All I'm saying is I'm not a fan of shiny after shiny after shiny after shiny after shiny. Never have been, never will be. I still say that Thorium BNB miner would have been fine and just go all in on that one. allow unstaking, charge a fee against it instead of another shiny, because all you're doing is losing investor confidence. And then the icing on top of the cake, of course, is how they changed the banks, changing it to where the banks now pay less and changing it to where not fixing the actual price of a thing. Now Thorium actually has a stronger value proposition than Libera or Libero. Doesn't surprise me, but my point is, if you're in it, you're in it. I'm not telling you what to do with your money. I'm telling you that people are upset that they're spinning up another shiny and abandoning now Libera behind the scenes. So then the other big news that happened was around DogeZilla. I covered DogeZilla a while ago, and the only reason I'm talking about it now is because I did coverage on it ages ago. And I did a high-level review, and what I was talking about was the fact that, yes, they had gone through the certain audit. Everything looked good. Everything didn't have a problem. It's all good, but I wasn't really sold. It didn't seem like it did anything. This was built by a guy called 9 Zeros. That's actually his username. And people know him very well. And the claim was that was the goal. We're going to get down to 9 zeros. It came with a sextillions of supply, nuts level supply. He went through the audit. The audit didn't come back very bad at all. It's actually a decent level score. And the stuff they called out wasn't that big of a deal. I actually looked at the audit report myself. There was not that much here that was really concerning. There were petty things like, refine your code, clean up your code, get it a little bit shored up. Now, I had stopped paying attention to it. I wasn't watching it. And then all of a sudden I noticed that the price goes weird. And it did that every now and then, but this was strange. So I looked a little bit deeper. If you notice here, the price starts doing this business. And I'm like, okay, what the heck just happened here? I checked CoinMarketCap and there's tons of comments and they're all saying that the guy rug pulled it. Okay, that's weird. And apparently he spun up a V2, but he also spun up this Zilla coin garbage over here. Now, here's where I have a problem, this Zilla coin. I'm going to talk about Zilla coin. I didn't do any coverage of it. I'm not going to do any coverage of it, but the Zilla coin is already updated on frickin' Binance Scan. It's already updated on the scan where it's got the social profiles down here. I talked about these jokers, all these scans, and whatever call center does this, they'll gladly support this. This thing just started. This thing just got created like a day ago. And it already has social profiles built. What it doesn't do, it has a website, but it doesn't have a LinkedIn. It doesn't have a Twitter. It doesn't have anything. But they were gladly willing to let them update social profile simply because it's got that many holders and it's got a Telescam account. That's the only reason. The Telescam account and a bunch of people jumping on hype when this doesn't do anything. And they were glad to update this crap, right? All right, so why? What the heck's going on here? And people are talking about, well, apparently what they were told just before this happened. This all happened, I think, on the 10th. Apparently what happened is this 9 zeros joker told everybody that they were trying to resolve the CERDIC concerns. And in order to do that, they needed to migrate to a V2. Okay. But they did the migration over 24 hours and they didn't migrate people's tokens. So what they did is they dropped and locked everything to where you had to sell the loss. There are people here who lost thousands of dollars on this that were sitting. This was since like November last year. They were sitting on thousands and then it all of a sudden went to $30. And then they claimed, this 9 zeros idiot, that they couldn't do a migration for them. They couldn't set up migration for that. And the value had already dropped, so they couldn't get out. So now, yeah, you can go buy the V2, but it ain't, your old is worth nothing. Okay, well, I couldn't see anything about a V2. So I tried to find V2. All that's there is a liquidity pool. So I know it exists and people already bought into this business. And it's down into the trillions instead of the sextillions. So, okay. So now people are pissed. They're pissed because they don't understand how is it that you can leave people behind like this? Like, we spent thousands on this and you told us DogeZilla is going to do this vault. It's going to do all these things. And now you're just leaving it behind randomly. Mind you, DogeZilla had like 300,000 holders to it. We're not talking a small crap out here. We're talking a pretty major thing. And unfortunate truth is people were left behind and they're not happy. Is it a rug pull? Yes, by definition, because the value of V1 is gone. But it also is a Ponzi because what you're doing is you're spinning up a new something off the backs of what came before, and you're not fixing what came before, just like LIBERO. DogeZilla is one of the few I said has one of the best white papers in the business. It still does. And for whatever reason, and I believe it was this guy that's in over his head, doesn't know what he's doing. I did reach out. They never called Leicester, and that's cool. I tried to help them because there were some things I wanted to see them shore up, and they didn't want to do it. As far as them talking about there was something on the CERTIC audit that they were trying to resolve, and that's the reason they were going to V2. I didn't see anything in the CERTIC audit that was drastically bad that would warrant a V2. There were certainly things, but they were not like crazy bad things. Centralization always happens. Everything else is a tiny. I didn't see anything that was really that bad. So I don't know if the guy truly is trying to rip people off or he just got caught with his pants down and Vaseline nearby on something and he's running from it, you know, like the car salesman or car salesman 2.0, lock pay. I don't know what it is. All I'm saying is, as a public service announcement, if you are in DogeZilla, your DogeZilla is worth nothing and you're not going to get anything because the guy apparently did not do anything to get you out of it. And he expects you to buy into the new one on your own dime and treat your old as a loss. If you were in it, that's the unfortunate truth of what that's doing. So, and of course, the comments are absolutely hilarious. So anyway, that's my updates for this week. I told you I'd be keeping it pretty slim because the FTX thing, I think, just kind of switched people off of cryptocurrency. There's a lot less volume traffic, people coming around, and that's okay. I don't mind it. I understand it. And it's a quick and dirty thing. So I'll shut up, see if there's anyone that did have any questions while that's here, while I check on Twitch, and then I'll wrap up. All right, looks like I don't have any questions here live. If you think of something after the fact, just leave it down in the comments below. I will make sure to get you an answer. Mind you that due to various types of spammers, it's not just the POS chain spammers anymore. It may be a delay before you see it, but it will be shown after I review it and I respond to it. You'll see it pop up there. And then, of course, I want to thank you if you dialed in live. Thank you for checking out after the fact. If I can answer any questions, I'm happy to do so. We are, in my opinion, and it's only my opinion, we are in for some tough times ahead. So keep a roof on your head, keep the bills paid, keep the lights on, keep people fed. Don't get hung up on this. It's going to get worse before it gets better. For now, it's going to get worse before it gets better. I do think we're in good times, long play, but we're not going to see a repeat of 2021. I can almost guarantee you that. We're not going to see a repeat of 2021 anytime in the near future. And we got to wash out the garbage of cryptocurrency. And that's going to take some time. Unfortunately, I think in the big picture, crypto has to grow up. We have to grow up. We have to get rid of the dudes that dress like bums and hair that looks weird. And we have to stop worshiping these people, you know, like this Bankman-Fried dude or Doe Rug Pull or, you know, even CZ or the car salesman or the cult leader. We got to stop worshiping these people and realize that greed is not the right answer for cryptocurrency. We have to be measured and conservative about what we do. And also understand that the economy is going to be in a bad spot leading all the way through 2023. I don't think it'll be as bad as it was in 2021, but it's going to be bad because the elections, people spoke, and it is what it is. And that's going to harm crypto as well. Because if we don't have a strong economy, we're not going to have strong cryptocurrency. And that's what I was afraid of. It's too much of a focus on things that don't benefit everybody. And that's going to harm sentiment. All I can say is if you're still committed to cryptocurrency, hold the line. Buy when it makes sense for you, but please make sure you pay the bills, keep a roof over your head, keep food on the table. I will check in with you guys next week, and thank you once again.